spot corporate conversations continue, and let's now talk about Skipper. The first quarter was a strong one for them as revenue nearly doubled, driven by the engineering and infrastructure segment, and their net profit also doubled on a year-on-year basis, but their margins contracted while order inflow is also subdued for the quarter. Now, to discuss more on the performance, Sharan Bansal, the director of Skipper, is joining in on the show now. Sharan, good afternoon. Thank you so much for joining in. I'd like to start off with the order flow itself. It was slightly subdued, and if I can see the trends also in the past, the order flow number has been pretty volatile, if I can call it that, because 403 crore this quarter, 416 the last quarter, third quarter of FY23 it was almost 2800 crores. So, and this time I'm assuming that the order flow was subdued because of the elections. Which is the segment that has been the most impacted, and do you see this 400 crore number improving as we go forward into FY25?
This slight correction, the actual order inflow has been about 700 crores this quarter. And honestly, it's in line with our overall annual target of an order inflow of between 4 to 5,000 crores. So if you see the last several quarters, we have been, if you see the whole of last year, we took in an order of approximately 4,200 crores. And that there was variations across the quarters. In some quarters it was as high as 1,500, and some quarters it was below 500. So honestly, as long as the annual order intake is maintained, which we are quite confident that looking at the bidding pipeline of approximately 18,000 crores that we have, both on the domestic and international side, we don't see a challenge in meeting our overall annual inflow targets.
Your annual inflow target for the year is 4,500 to 5,000 crores.
Correct, that's right.
Okay. And what is the remaining 3 fiscals looking like in terms of the order inflow on an average? Do you think that you can probably even better this number?
Well, I think, of course, the aspiration will be to do better. However, looking at, we have enough on our plate right now as well. We currently at a 5,800 crore closing order book that we have as of quarter one. We obviously are fully booked for this year and part of next year as well. So we do have a lot on our plate for execution. So we're actually quite, we don't mind this slight delay in order inflow on the quarter one and quarter two side. Having said that, look, there are, like I said, domestic ordering has been subdued because of elections in quarter one. Part of quarter two also we may see affected, but I see there's enough opportunity both on the domestic and international side to make up by the year end.
Okay, so that's a good problem to have, where you probably want slower amount of orders to come through because you don't have that capacity to probably cater to it. What I meant to say is that what is the demand looking like? And you answered it partially, but it seems as though the international business seems to be more robust in terms of demand vis-a-vis the domestic.
Well, actually, it's the other way around. Domestic market has been very, very strong for the last year and a half, where tendering activity has been extremely strong. And we find that that is likely to continue, and it is only going to be seeing an uptick up till FY30 and FY32 perhaps, because even the government of India has upped its total peak power demand by FY32. We see a lot of action happening even in the budget. We saw allocations to thermal power plant and nuclear power plants now. So we feel that it's only a temporary blip right now, but there is, in terms of order demand, domestic markets are not going anywhere. In terms of international demand, renewables is driving the demand in most markets in the 65 countries that we are operating in. And we see healthy bid pipeline in all those markets.
Sharan, firstly, I correct myself on the order inflow bit, but since you mentioned that the order activity has been pretty robust, usually you would find that you would want to expand capacity to cater to this increasing order inflow. Is there a capacity expansion plan on the annual? Because I know for a fact that there is an expansion underway for the engineering segment. When does that get commissioned as well? And apart from that, is there any expansion plan on the annual?
Yes, surely we have taken on a capacity expansion plan of approximately 75,000 tons, which will increase our capacity by about 25%. And we've taken on a capex of 200 crore plus for this year for that. And we expect that this commissioning should happen towards the end of this year.
So do you think that you would, with this kind of order inflow activity, you would want to revisit your revenue guidance? You're aiming for a 25% CAGR over the next 2 years. Do you want to revisit that and say it on the upside?
No, as a company, we believe that 25% is a healthy CAGR growth to target. We have done much better last year than 25%. And honestly, look, there can be variances quarter on quarter, but as long as we are meeting our guidance of 25% plus, we definitely aspire to do much better. But I think that's a healthy target for us to take over the next couple of years.
Okay, all right, Sharan, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Skipper. That stock is doing well in today's trading session, up around 4% sticking to its guidance of around 4,500 to 5,000 odd crores in terms of order inflow, and they've done over 700 crores in terms of order inflow this quarter. Currently, the order book stands at over 5,000 odd crores for the company.